Hello and welcome to Prepspot. In this video, we are going to discuss one of the most significant reforms in India's tax landscape, the newly tabled Income Tax Bill 2025, which was introduced in the Lok Sabha by Finance Minister Nirmala Sitharaman on 13 February 2025. This bill is set to replace the Income Tax Act of 1961 and will come into effect on 1 April 2026. The primary aim of this reform is to simplify a system that has grown increasingly cumbersome over the past 6 decades by eliminating redundant provisions and outdated clauses. The government's objective here is not to overhaul the fundamental tax structure or alter tax rates, but to streamline the language and administrative framework to reduce legal disputes and make the law more accessible for the common taxpayer. One of the key features of the new bill is its focus on simplification. The revised legislation reduces the overall length of the tax code from over 800 pages to 622 pages, and the number of sections has been trimmed down from more than 800 to 536. This significant reduction is achieved by removing obsolete provisions and integrating various explanations and provisos directly into the relevant clauses, thereby making the document far less fragmented and more reader-friendly. The bill also employs tables and formulae to present critical information, such as the calculation of tax deducted at source, TDS, and salary deductions, in a clear, concise manner that simplifies compliance for both individuals and businesses. Another groundbreaking change introduced by this legislation is the replacement of the old system of assessment year and previous year with a unified concept of tax year. Under the new bill, the tax year is defined as a 12-month period commencing on 1 April, which aligns with international tax practices and eliminates a long-standing source of confusion among taxpayers. This change is particularly beneficial for new businesses and professionals who can now have their tax period start from the date their income source is established, rather than being bound by the traditional, often perplexing fiscal calendar. By adopting the term tax year, the government aims to provide greater clarity on filing dates and tax payments, ultimately facilitating smoother and more efficient tax administration. In addition to these structural changes, the new income tax bill includes several administrative enhancements designed to improve overall tax governance. One such improvement is the empowerment of the Central Board of Direct Taxes, CBDT. The bill grants the CBDT expanded rulemaking powers, allowing it to update and implement administrative procedures without the need for frequent parliamentary approvals. This delegation of authority is intended to reduce bureaucratic delays and ensure that the tax system remains adaptable in response to technological advancements and evolving business practices. Furthermore, the bill introduces a structured dispute resolution framework that mandates the establishment of a dedicated panel to handle tax-related grievances. This panel is required to issue detailed, reasoned orders for each dispute, thereby increasing transparency and reducing the likelihood of prolonged litigation. Despite the sweeping changes in structure and language, it is important to note that the core principles of taxation remain intact. The new bill retains the fundamental tax rates and the 5 major heads of income, namely, salaries, income from house property, profits and gains from business or profession, capital gains, and income from other sources. This continuity ensures that taxpayers familiar with the existing system will not face drastic changes in how their income is classified or taxed. Moreover, the bill has been drafted with extensive feedback in mind. Over 6,500 suggestions from chartered accountants, legal experts, and the general public have been incorporated into the final version. This inclusive approach highlights the government's commitment to creating a legislative framework that not only meets modern needs but also addresses the practical challenges faced by taxpayers in day-to-day compliance. The broader economic implications of this reform are also worth discussing. By simplifying the tax code and reducing administrative burdens, the government aims to enhance voluntary compliance and reduce the number of legal disputes between taxpayers and the authorities. This, in turn, is expected to boost investor and consumer confidence, ultimately supporting economic growth. A more transparent and efficient tax system can lead to higher tax collections in the long run, even if the immediate effect is a modest reduction in revenue due to streamlined processes and clearer guidelines. Furthermore, by aligning tax terminology and processes with international standards, the bill positions India as a more attractive destination for both domestic and foreign investments, which is crucial in today's increasingly competitive global economic environment. It is also significant that while the new legislation modernizes the language and structure of the Income Tax Act, it does so without imposing any major policy changes that might disrupt the existing tax framework. Taxpayers will continue to benefit from the current slabs and exemptions, and the familiar methods of computing taxable income will remain unchanged. This careful balance between innovation and continuity is central to the government's strategy of minimum government, maximum governance, where the focus is on reducing procedural complexities without compromising the core tax revenue mechanisms. In essence, the bill is a reflection of the government's broader reform agenda, one that seeks to update legacy systems to make them more efficient, transparent, and in tune with the digital age, while still maintaining the stability that businesses and individuals rely on. From an educational perspective, it is crucial to understand that such reforms are not merely bureaucratic exercises but have real-world implications for millions of taxpayers. The simplification of tax laws reduces the cost and effort associated with compliance, potentially lowering the barrier to entry for small businesses and startups. This can foster a more entrepreneurial ecosystem and stimulate economic activity across various sectors, from manufacturing to services. In turn, these changes can contribute to job creation and overall economic growth, which are especially important in a country like India, where the middle class plays a vital role in driving consumption and investment. Moreover, the new bill's focus on digitalization is a critical step toward modernizing tax administration. In today's digital era, vast amounts of financial data are generated daily, and efficient management of this data is key to a robust tax system. By incorporating digital record keeping, facilitating faceless assessments, and streamlining the process of tax filing through user-friendly interfaces, the government is not only reducing the administrative burden on taxpayers but also minimizing the scope for human error and corruption. These measures are expected to lead to faster processing of returns, quicker resolution of disputes, and ultimately, a more dynamic and responsive tax system that can adapt to the rapidly changing economic landscape. To summarize, the Income Tax Bill 2025 represents a comprehensive reform aimed at simplifying and modernizing India's tax system. With its reduced complexity, clearer language, unified tax year concept, and enhanced administrative mechanisms, the bill is poised to make a significant impact on tax compliance and economic growth. It preserves the core principles of the existing tax structure while incorporating modern innovations to address the challenges of the 21st century. This reform is not just about making the tax laws easier to read, it is about creating a more transparent, efficient, and taxpayer-friendly environment that will ultimately benefit the entire economy. As stakeholders across the board, from individual taxpayers to large corporations, begin to adapt to these changes, it is important for all of us to stay informed and engaged with these developments, as they will shape the future of India's economic policies and growth trajectory for years to come. Drop your comments below and let's discuss. Answer this question in comments. The correct answer will be given heart and pinned. Lastly, we just want to let you know that we are a newly emerging online platform for competitive exams. Creating educational explainer videos like these requires a lot of effort, money, and time. If you like these videos and want us to excel and create videos in all categories of competitive exams, then you can consider supporting us with a one-time donation through the Ko-fi platform and also by becoming a member through Patreon. This will help us create more such informative educational videos in the competitive exams space. So, one last time, subscribe and share this channel with all your friends who are preparing for competitive exams. And also, follow us on social media platforms. The links are given in the About section of the channel and also in the video description. So, see you in the next video.